Hey, ladies and gentlemen, my name is David Ruff, and we are looking at a mortgage crisis. I mean, like a bomb and a foreclosure tsunami that could be coming for Canada and the United States, not just there, actually, but anywhere. So, there has been all kinds of tools for a long, long time that they've been trying to protect against something like this, like the stress test. Now, we're going to be covering that, but let's talk about what is happening now with the new trigger rates. You may be seeing this all over the place in the news. What is a trigger rate? And I actually saw a really good excerpt in the news talking about what is a trigger rate. So let's take notice of this and let's pop this up.
Rising interest rates could soon set off a financial bomb for tens of thousands of Canadian homeowners who have a fixed payment, variable rate mortgage. According to one major bank,
remember, this is all over. So this is tens of thousands of Canadians. So they're going to see 80,000 Canadians, but we're talking almost 1 million Americans. Crazy, right? All right, let's keep going.
Interest rate hikes are bringing them closer to the trigger point of their mortgage. And here's how it works. Mortgage payments are, of course, a combination of paying down the principal amount plus the interest. But when interest rates increase to the point the mortgage payment no longer covers the interest being charged, that interest is deferred and added to the principal balance. When that outstanding principal balance, including the deferred interest, grows to the point where it exceeds the original principal amount, the amount that was originally borrowed, that is the trigger point.
Okay, so it kind of sounds complicated, right, you guys? So let me just try to boil it down for you. Everybody knows that when you get a mortgage on your home, you generally have a fixed rate in the US, like they fix it for 30 years. But so a fixed rate, okay, just one payment. You know what the payment is for the rest of your life. Cool. Or variable rate. And, you're subject to whatever the market is at the time. But there's also something that's in the middle. All right. Obviously, if you're on a fully adjustable rate, it's going to go up and down depending on whatever they do. But there's this like kind of middle ground, this gray zone where you have a variable rate, but it's fixed for the first year or the first 2 years or something like that. So even though the rate has gone sky high this year and you were in a variable rate, you were locked in for a year, maybe 2 years. You know what I mean? So there's a fixed amount of time before it goes variable. So he's talking kind of about these middle group, right? That once you hit a certain rate, it's going to trigger it higher. So imagine that you got a loan last Christmas for 1%. And say the government went bananas and charged you 10, you don't just get that 1% for the whole year, even though the government went to 10. There is a maximum that they allow. And that's where we're going to talk about stress tests in a minute. But now that you know that, let's continue with this video so you can finish the watch of this bit of news.
As the Bank of Canada continues to hike interest rates, it'll now likely mean higher monthly payments for variable rate mortgage holders by year's end.
Certainly it's unique. It's very unique.
RBC estimates roughly 80,000 variable mortgages will hit what's called a trigger rate after, quote, the next couple of rate hikes by the Bank of Canada. Of those variable mortgages, they say it'll mean an average increase of $200 per month.
Okay, but you have to understand that it's not going to be an average of 200. I strongly disagree with that. Right now in Toronto, the average monthly payment is $1,073 up. Right now, $1,073. So obviously, a lot depends on the size of your mortgage. How much money did you put down? What type of property you put down? Obviously, the less you put down, the more susceptible you are. And the larger the property, the more danger you are in as well. So we have to be careful about those things. This $200, I don't know what you're talking about. It's more like $1,000. So that's the first part that I don't exactly agree with.
Trigger rate is when you're not making the minimum required principal payment towards your mortgage. So it's a protection strategy that the Canadian banks have in place.
The best way to calculate your trigger rate is by multiplying your monthly payment by the number of payments per year and then dividing it by the outstanding mortgage balance.
It's so confusing.
For example, if your mortgage balance is $500,000 and you pay $2,200 per month, multiply it by 12 months, and then divide that by the amount owed. In this case, it's $500,000. Your trigger rate would be 5.28%. If the Bank of Canada's interest rate goes above that, your lender can now adjust your payment amount even though it's normally fixed.
So this trigger rate ensures that the amortization doesn't go beyond the original amortization within the criteria in which they got the mortgage.
At that point, advisors will offer one of three options. One, increase your monthly payments. Two, switch to a fixed rate mortgage. Or three, pay a lump sum.
There's certainly going to be some level of pain in the marketplace.
Some level of pain. Okay, I'm sorry. It kind of sounds like political talk. I don't want to be political, but some level of pain. I talk to hundreds of people per day, not myself, but we have a group of people, and generally everyone's talking to about 100 people a day. We got people who cannot buy food or their medicine or put their kids in school or afford food, let alone to pay an extra $1,000, $1,500 a month more like they do for the payments in Toronto. Now, I know that not everywhere is as expensive as here, but it's a real squeeze on people. So that I find that was a really good way to summarize what the rates were. But this is going to cause a lot of pain on people. Remember, in the United States, it's almost 1 million people. In Canada, it's like 100,000. That level of people getting smooshed is going to create a lot of economic hardship that is coming. That is why I have no belief in all of these TikTok and YouTube realtors. They're all saying September is a great time to buy. October is a great time to buy. Keep buying, keep buying. Listen, I think they got too much commission on their eyeballs. I'm telling you, don't buy. Probably one of the only realtors out there telling you, don't buy this year. This year is going to be mayhem, and wait till next year. So in Canada, we got something called a stress test. So whatever the rate was at the time, let's just go back a few months. Let's say the rate was 3%. The bank wants to know, can you qualify for 2 more? So can you qualify for 5%? If the rate goes to 5%, could you still afford it? Even though it's only at 3% today, can you afford that buffer zone of 2%? Can you do that? So whatever the rate is, can you afford 2% more? So if all the people that are out there that have mortgages today, all of them, if the banks already know and the government knows you could afford the extra 2%, they're not really scared to raise it that extra 2%, right? We are at that wall now. So if we are breaking through that and they're going to raise it a few more times this year, you probably are going to be in that trigger point. So if you had an adjustable rate mortgage with a fixed term, it's going to be affecting you now. And all those people who were on variable were getting affected anyway. Fortunately, we were able to lock in our rates last year. As soon as they said they were going to start raising it. I mean, why wouldn't you lock it in? Lowest rates in 5,000 years, right? So we tried to do it, but there is some more pain to come. And so these trigger rates are going to happen. So all those people who did get a variable rate with a 1-year lock on it or 2-year lock, whatever that was, it doesn't mean that it's guaranteed locked for you at that rate. It means it'll hit that point, that fine print in that one line of contract that's going to bump it up higher. And you got to now pay more per month or a massive lump sum. And with today's inflation, we cannot afford either. So big troubles that are coming. All right. I don't remember this video, so let's just finish it just so that you guys can finish this tiny thing. 30 seconds.
And there will be a small subset of people that perhaps fell across hard times, lost their job, were relying on this payment, and they could be in a difficult spot.
Mortgage brokers add every homeowner with a variable rate mortgage will have a different trigger rate. So for a more accurate number, it's recommended you call your mortgage lender. Kamal Karamali, Global News.
Yeah. Okay. So nothing more new. So only a small number of people, I don't know, 1 million people in the United States, that's not a small number. Okay. that number of people. Now, that's the number of people that the rates would go up on. Now, it doesn't mean all million people would automatically go into foreclosure and go bankrupt, but a big portion could. And that would be enough to tip the market right over. So anyway, my point, always be careful, right? You and I can do nothing about inflation. We cannot affect monetary policy and fiscal policy by the governments. We can't do anything about it. What you have to do is be smart about it, learn about it, and try to outrun inflation, out-earn inflation. That's the only way that you're going to do it. So I always encourage you to read these two books, Ray Dalio and Peter Zian. These two books are phenomenal. They're great books this year about the world situation where we are in right now. You need to prepare. And the best thing I know how to do is how to invest a little bit over a long period of time in a lot of different strategies to try and have multiple revenue streams coming in. Like always, we try and say buy a little bit of Bitcoin, a little bit of Ethereum, tiny bit of silver, gold, and then have your own business if you can, rental properties. You need things that will be throwing cash off your way so you can outrun inflation. Anyway, you guys, I'm always there for you. I care about you. I want you to do well. Keep on fighting. Don't let up. Keep learning. Keep applying it in your life. If you read it and don't apply it, you didn't win. So just keep learn, apply. Keep doing that. And if you know anyone that this would help, send it to one person. It would really help me out. We're trying to grow the channel, get our news out there. Please remember to like, subscribe, follow to this. If this helped you out at all, I'd really appreciate it. Hope you have a great night.